Folks, welcome back to another update for natural gas in the ETFs. Now, after a bit of a bull run recently, we've turned bearish.
Oh no, it seems bearish.
So before we go any further, make sure you hit that like and subscribe button, but also reference the +1 videos and some Patreon videos which we publish each week on the Patreon page. Links in the description below. Now, in terms of the outlook, natural gas prices sit near $4.10 after a sharp pullback driven by warmer weather forecasts, despite seasonally declining inventories. Global supply remains strong, particularly from the US, which expanding LNG export capacity expected to create potential oversupply in 2026. Demand growth has softened overall, with Europe continuing to diversify away from Russian pipeline gas and Asia showing mixed consumption trends. Russia-Ukraine conflict and infrastructure risks keep geopolitical risk premiums elevated despite stable supply flows. Middle East tensions, including threats around the Strait of Hormuz, continue to pose choke points and terror-related risks to global gas logistics. Market outlook for 2026 leans towards downward price pressure, moderated by winter demand and persistent geopolitical uncertainty. So first, looking at the weekly chart for natural gas, you can see here on the weekly, the price is still above the moving averages, but notice the CCI has pulled back and broken into that moving average range. If you're trading on the daily time frame, you go in the direction of the weekly, and here you would have closed it out with that breaking into the moving average of the CCI. And there is no divergence currently on the weekly. On the daily, you can see there it hit this resistance we drew last time at 53.20, and it's broken down from there. That's also a result of this bearish divergence which we drew, broke down into our 23-38% range, that Fibonacci range. Remind everyone, goes down to that low there before the divergence started. That's at 23-38% Fibonacci. You can see there it's currently resting around the 50% level. Now there's currently no support that I can see to draw there. That looks like it could possibly fall further, but especially if it falls below that 50%, we're going to see further downside. You can see there on the CCI as well is still declining quite sharply. On the 1 hour time frame, we look for any potential reversal opportunities. Now here we do have a bullish divergence. We've got higher lows on the CCI versus the same period, lower lows on the price. Now at the moment it's consolidating right at the bottom there on the price. It could start to rise from there, or the price could still decline. As long as the price keeps declining and the CCI keeps rising, we're going to consider that a very bullish divergence. Now, in terms of assuming it pulls back from there, draw a target range, Fibonacci target, that high before the divergence started, and expect a minimum retrace to that 23-38% range. Now, that's assuming it starts pulling back from there. Of course, it could fall further, in which case we have to then extend the Fibonacci range and readjust that target. Now, in terms of a back test, we're going short in this case, according to the daily, and you started going short from that point. You can see there the position's held and you average down a few times, and you would have closed it out somewhere in this period here as indicated by the back test. Avoid trading long and wait for a further downside break with the price and the CCI below the moving averages to enter more positions. They'd be up quite nicely at the moment. Again, respect this bullish divergence. Now looking at BOIL on the weekly, now that's already broken below the moving average of the price this week, and you can see there the CCI is also below that moving average range, a very narrow moving average range, bearish nonetheless. So bearish momentum on the weekly. On the daily, we were going along during this period, finally broke down as indicated by that arrow. Price breaks below, and so does the CCI below the moving averages. You would have started taking short trades on the hourly if you're trading on the hourly time frame. Looking at the hourly as well, what we're looking for is any divergence. See there, price and the CCI is still below the moving average, although it's about to break into that little moving average range. So looking at the back test for the short positions for BOIL, and you would have started going short from around this period. Still been doing quite nicely with a couple of average downs possibly on current trades for the 1 hour period. So for KOLD on the weekly, still bearish, prices below the moving average, and so is the CCI. So still bearish on the weekly, which means you're going short only on the daily if you're trading the daily. And on the daily time frame, if you're trading on the 1 hour, you would have started going long a couple of days ago on the 1 hour. And you see it indicated by that blue arrow. Price and the CCI broke above. Well, the CCI has, but you probably could have entered it there. and that started going long. Look at the 1 hour time period, and what we're looking for is any divergence. Price and the CCI are moving in tangent, so there's no divergence. And you would have started going long that period according to the daily trend. Looking at the back test, again going long from that period, it'd be up quite nicely at the moment. A couple of closed trades as well, getting ready to possibly close out your trade when the price breaks into that moving average range. And for UNG, the weekly chart shows the price has broken through that very narrow moving average range. The CCI has broken into that moving average range, so giving us a somewhat neutral to bearish momentum. But notice we did have this long-term bullish divergence. Now it looks like it possibly failed that divergence because we're resuming a further downtrend possibly. So again, these divergence more than 90% of the time work. Sometimes they fail. In this case, this one probably failed. So I can probably write that one off. Now that's the weekly. On the daily, it would have been going long from that period according to that blue arrow I marked, and then started going short from that handle there when it broke below the range. The CCI also. You'd be trading short on the 1 hour time period. No divergence there, looking at the 1 hour time period. Then going short from that period. Again, probably still keeping a short position open if you're going short, and wait for the moving average range to be traded. Now looking at the back test, on the short back test, again, you would have started going short from that period. Would have had a couple of little closed trades. Now, the reason I close some of these trades, again, reference the +1 videos for various exit techniques, but I like to use 0.005% gain whenever I'm up in profit, get out and then re-enter it again, get out and then re-enter it again. Average down goes in the opposite direction. As well as access to the +1 videos, why not subscribe to the Patreon page? And that's where we look at bullish shares each weekend. We run a bullish share scan for various regions. And these are some of the trades we've taken during December so far in about 10 days of trade. And they have returned 4.71%. And last month, just as a reference point, in November, we've traded a number of shares and that returned 5.66. Again, that's pretty good for the month. If you annualize that, it's a pretty good return for the whole year.
You must be kidding.
Again, reference in the links description below for the Patreon page where we do the +1 videos, but also the bullish share scan. Thanks for watching. Hit that like and subscribe button, and we'll see you in our next update.